Hello and welcome to another edition of the Moving Iron Podcast. This podcast is proudly provided by Axon, helping dealers move more iron for almost 100 years. Find out more at axontire.com. Axon was started almost 100 years ago out of a passion for keeping agriculture moving. It's that same passion that drives them today. With a vision for a better experience for both farmer and dealer, they set out to create a better way to move more iron. When you partner with Axon, you get immediate access to a full range of products and solutions designed to meet the complex needs of today's grower. Axon carries all major brands and sizes of tires, wheels, and tracks. From custom colors and sizes to fully customized wheels, you can have the solution for virtually any problem today's farmer is trying to solve. To find more or become an Axon dealer, please visit axontire.com.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron, time and time again. Through the years you'll find us here. Moving iron.
Hello and welcome to Moving Iron Podcast. Marcus with Chip Nellinger. This edition of the Moving Iron Podcast is brought to you by Axon Tire, helping dealers move more iron for the past 100 years. For more information, go to axontire.com. Also, if you're looking for a great place to find good ways to manage your salespeople's activity as well as help them manage their deals better, check out Arrow at heyarrow.com. Chip is with Blue Reef Agri-Marketing out of Morton, Illinois, and Chip was nice enough to come on once a week to talk about what's going on in the marketplace. So, Chip, how you been, man?
Hey, doing well, Casey. Thanks for having me on. It's been, as always, an interesting time in the markets here to talk about.
Yeah. This has been this week in particular has been a very volatile week in the markets. A lot of stuff has been taken off and climbing up. Let's start with wheat for a little bit. Wheat has been kind of leading the way here a little bit for the most part of this month and last month for that matter. And as you take a look at the wheat market, what's going on there, you kind of feel like we've hit that high for the year, and maybe we're starting to maybe regress a little bit, and then maybe see something here as we head into that January report.
Yeah, wheat, as you mentioned, it has been leading us higher, and you don't oftentimes get to say that. A lot of times in years past are like, man, this corn market can rally, except wheat is just a dog. So it's been the exact opposite, where wheat has kind of led us higher. Obviously, some well-publicized problems with the spring wheat crop in the northern plains, right. And some European Black Sea area shortfalls in wheat. To me, it feels to me like we're getting a little overextended in here. We're north of $8. Spring wheat has put a correction in. It, quietly is now, 60, 70 cents off its highs. And it got into an area between $10 and $11 that on a long-term continuation chart makes some sense why the spring wheat, would slow down. Here's the thing about wheat. We talk to producers in areas, southern Illinois, southern Indiana. They do raise some wheat down there, but there's guys that planted wheat this fall that haven't planted wheat in 10 or 15 years. So high prices will do its job and bring in production not only here but across the world. We're coming into the time frame where we're going to have a southern hemisphere harvest coming up, and so. I'm not here to say that there's no upside in wheat left, but this thing is getting to be a mature bull. You've got, well over $8 for, this 2021. You're looking at, July of 22 that also is offering prices over $8. 23 wheat got somewhere in the 770, almost 780 range.
Wow.
And so I think we're doing a job with price that's bringing some production in. And that's the function of the market, right? If you just let it do its thing and not interfere with it. High prices will bring in, those marginal acres and extra production. We took them out with low prices. We're seeing the result of that now with high prices. And, the backside of that pendulum is going to be greater planted acreage, I believe, across the world here over the next 6 to 9 months as well.
Right on. So when you look at, we kind of talked about the Black Sea and those kind of in that area in Europe and what they've got going on there. There's obviously a lot of pressure over there with the Ukrainian-Russia situation, but there's also a lot of pipelines that come through there through Ukraine that feed into Europe. Europe's wheat situation has over the last couple of years have been pretty tight. So has Russia's wheat. So has Ukrainian wheat. I mean, that whole area has been a tight situation. What kind of play do you think that's going to have on the overall market here as we start getting those final numbers start pouring in here as we head towards the end of the year?
Yeah, there's always a lot of moving gears with that. One thing that's a little confusing here is it does seem like over the past couple of weeks that Ukraine has a touch more corn than what they initially thought. They've been selling some corn allegedly to China in here. That's probably business we would have gotten. And so maybe that Ukrainian corn crop is a touch better. The wheat situation. Part of this is a hangover, so to speak, from COVID and the shutdowns and everything from a year and a half ago. Not so sure that Russia doesn't have the crop, but they're trying to battle internal wheat price rises, right? Their internal wheat has gone up. I believe it's close to record highs, if not record high. That is not something their government wants, is, their ordinary citizen in Russia to be crunched, because wheat's a massive part of their diet and their culture there. And so, that's the situation. It's not maybe necessarily that it's that short of a crop. It's just that there's kind of that hoarding aspect where countries with the supply chain issues and the shortages from leftover from COVID, they do not want to run out of food. And so they're kind of in a little bit of hoard mode. Now, with all that being said, Putin has the power. You mentioned the energy situation a little bit. I think some of our quote unquote, I don't know, for lack of a better term, enemies, Russia, China, due to, our own issues here, and starting with the Afghanistan debacle, probably are going to push the envelope a little bit. And so Putin has all the power from the natural gas standpoint. Europe wants the gas. He's got the gas, and he's got the power now because you're about to, run head steam into the brick wall of winter over there. And so with that, there's been some, upheaval with the Ukraine-Russia situation. And, they're going to test us. And they probably not going to run into much resistance, and they're going to take back maybe some lost ground, so to speak. Both Russia and China is. We had some talks with the Chinese president and Biden earlier this week. Didn't really have supposedly much to do with trade, which is probably good from China's standpoint, because they're going to continue to, do what they've always done, and that is buy it from anyone that isn't United States unless they absolutely need it. And so, it's a long answer to your question, Casey, but, I think this wheat situation may be in the early stages of trying to resolve itself a little bit with increased production. But, Europe and the energy situation over there certainly plays into the geopolitical part of this. And it's just a lot of moving parts here to this thing.
Yep. I mean, to that point, they just had an Asian trade meeting of sorts, and everybody was there but China. You had, I think it was like India, South Korea, Japan. So it's kind of showing that we're doing our best not to include them in what's going on, and that's right, wrong, or indifferent. That is something that strategically we need to kind of have that arm's length with them, I think, sometimes, but. All right, so as you take a look at...
Don't even get me started, Casey. Don't even get me started.
Yeah, it's a mess. But anyway, yeah, I could go for days, too, on that topic as well. But, all right, jump down to South America real quick, take a look at what's going on there. There is a lot of activity that you see down there. I mean, every report that's coming out of there is it's going to be the best crop ever, which isn't... I've never seen anyone, after planting a crop, come in and say we're going to have the worst crop ever. But that being said, there were a lot of acres that got planted in South America. So as you take a look what's going on down there, you got some rains and those kind of things during the planting of that soybean crop. So I guess you take a look at what's going on there, and going through Safina and what you see happening with that corn crop there. I mean, what are your thoughts as you look at South America right now?
Yeah, I think this is a great learning example here. I don't disagree with anything you said about South America. It appears that they are on track right now, unless a very quick problem develops within the next, say, 5 or 6 weeks here. It appears that they are on track for what potentially could be a massive, massive crop. Biggest ever by a long shot. Not like, hey, we barely beat the old record. I'm talking about, the potential to be, 300-400 million bushels higher than or more above their previous highest bean crop ever. And so, but the learning part of this is all that's fine. Nothing's changed there. In fact, it's gotten better, in my opinion, because they have got some rains in parts of southern Brazil. I mean, you couldn't ask for a better start to their planting and early growing season. But here we are, 1, 2, 3, 4, 6 days after the crop report. Remember, we broke 75 cents into the crop report because, we're going to be swimming in beans, and Brazil has this massive crop coming. And the low of the report day was 11.81 in January beans. We're now trading at 11.62. So you're talking 80 cents above where we were trading on the report day, on the November report day, and arguably things have gotten better in Brazil. So it just goes to show you, the fundamental picture isn't always the main thing here, and the market's going to do what it's going to do. We got people too short going into the report. You got soy meal too cheap relative to soy oil and corn. You've had a huge rally straight up in soy meal. That's only increased the profitability to domestic crushers here. Soy oil's 44+% of the crush. So as soy oil has rallied, they're actually increasing the profitability, whereas soy oil is only 11% of the total crush. And so this has helped, increase domestic crush margins, and it's more of a technical trade. You're towards the top end of the range now. Everybody that was all bared up thinking we're going to, back to $9 beans immediately, now blown out of the market. They just had their head blown off, and they're scratching their head wondering, hey, that was really fun being short beans. We just rallied 80 cents, and nothing was bullish. And so it just goes to show you have to have a plan, right? Mm-hmm. And a plan, the fundamentals win in the end, but in the short run, there's a lot of fluctuations, and this has largely been spread related, technical related. You're now to the upper end of the range. If you sold this thing ahead of the report day and threw in the towel, you're really kicking yourself right now. But if you didn't, now's an opportunity. And I'm not saying you can't go higher. You're up at the very upper end of some resistance in here. If you can close these January beans above 12.66 1/4, I think you got a shot of pushing maybe just shy of $13. But this is an opportunity. We know where our bean yields were. In most cases, they were very, very strong. You got massive gross dollar per acre figures staring you at the face now on both corn and beans. And you've got new crop beans at 12.50 right now on the November 22. And, that's one of the highest levels we've ever been able to start when you start talking about risk management for, this far out, a year out, and beans for that 22 crop. So to me, there's a yellow flag here waving in the air, and lights shining in our face, screaming, opportunity, opportunity, opportunity. We got to look at the gross dollars, and we got to start thinking very seriously about some, 22 bean risk management strategies, because it's a profitable level right now. And corn, with the input costs, aren't as strong of prospects right now relative to where beans are from a new crop position.
Right on. All right, let's talk about the proteins here a little bit. So if you look at what's going on over in hogs, China's still coming and buying stuff. You're still seeing that, but cutouts got just tore up yesterday. So I guess as you look at what's going on there, what are your thoughts on that? As far as China keeps coming and buying stuff. Do what I say, not what I do. Type of listen to watch what I do, not what I say. Type of thing with China. And as you take a look at that, what are your thoughts there? as you look at that hog market?
Yeah, I mean, that's been a volatile market to try to predict. We had, double-digit gains yesterday.
Right.
February hogs are up a couple bucks. And as you mentioned, afternoon cutout just decimated. So one of the worst jobs in the world right now, in my opinion, would be a cash meat trader, particularly on the pork side of the equation. I don't know how you'd even keep your sanity trying to do that. The other thing that's a little concerning to me, and I just saw some blips on it, is, the potential that the Biden administration is saying, we're going to try to help this inflation by increasing the chain speed on the pork side. And I'm like, do you really want them doing that?
Right, no.
Can we even do that?
Yeah.
I don't even know if that's even possible.
If it was possible, we'd already do it, right? I mean, it would be,
yeah.
You know what I mean?
Last thing in the world you want is them screwing that up.
Yeah.
And so, to me, that is a little bit of a warning flag. I think yesterday's strength was a little bit out of the ordinary, out of the blue for me, and a head scratcher. But we're still in this, huge inflationary environment where different days, there's various markets that there's just money that comes in. People
Right.
just want to own stuff.
Yep.
You look at some of these, gold's had a run, but not every day. Pork, hogs, I guess, in the big picture, maybe with the setback we've seen off the highs here over the last couple of months, people feel that's cheap. Coffee's been on a huge run.
Yep.
Obviously we talked about wheat, up at multi-year highs. So I don't know, a little bit concerning to me. But here's the other thing from a producer standpoint, even with the rally in meal, and even with, $5.50 corn out there, you look at some of these deferred hogs, summer hogs, the August hogs, 95.10, July of 22, 96.25. I mean, these are great levels, just great levels. And so, we can argue fundamentals and increasing the chain speed and China buying pork, but I think at the end of the day, you got to look out there and say, this thing looks pretty darn good from a profitability standpoint, even out a year. So I think from a producer standpoint, you got to be looking at revenue and margins and maybe not trying to predict as much, because that's going to be impossible.
Right, absolutely. All right, let's jump over and talk about what's going on over on the cattle complex. Seems like there's a little bit of a wait and see thing there. Cash prices are, there's been some light activity here this week, but as you look at what's going on, I guess cattle on feed report comes out here on Friday, right? And then that'll give a chance to see what's actually out there. So I guess, what's your thoughts there?
Yeah, but, a little bit different than the hog side of the equation. We've seen the cash market finally start performing here the last 3 or 4 weeks, and we really narrowed the basis, meaning cash now is, about equivalent to where the December futures are. And the problem here is the deferreds, February, call it $5+ above where the cash market currently is. And the April is, $8 to $9 above where the cash market is. We've got a lot of optimism built in out there into the winter. And so, I think we're maybe towards the upper end of what fair value is for the time being. I think there's a lot of people with, based on all kinds of things, demand, the drought, and, the amount of cows we're killing is, 10, 12-year highs. That's been a little bit of a drag on the front end, but I think in the back end of that, people are saying this thing's going to get really good. Our numbers are going to shrink. My fear is it's not going to happen fast enough for some of the bulls, meaning a lot of people thought it would be February, April. I think it could be out in the summer where things get really, really good, which isn't kind of the normal. And so, again, from a producer standpoint, you knock on the door of 140 April, and, we've been up towards 138 on the Februaries. That's got to be looked at pretty closely because that's good money. If you want to be bullish, buy a put or some sort of put strategy and keep some upside there. But these are good levels on the February and April. I think that's not to say that we can't get really good somewhere out ahead of us, but to think the cash market can go $20 higher by February might be a little bit of a stretch. We already got $6-7 of that factored in already, so got a little bit of a head start on the futures out there with the premium that they've got right now.
Right on. Well, Chip, good stuff as usual. Folks want to reach out to you and get more information about what you're doing over there at Blue Reef Agri Marketing. What's the best way to do that?
Best way is just give us a call at the office, 309-550-7213. We'd love to chat with you. It's I'll tell you what, Case, I've been doing this a long time. I love the markets. I love the kind of the four-dimensional chess game aspect of it, and it is more challenging than ever. And that's fun to us, but from a producer standpoint, it drives them crazy, but that's what we love and enjoy. So we'd love to chat with you.
Right on. Well, Chip, thanks for being on the podcast, man.
You bet. Thanks for having me on.
I am Casey Seymour with Moving Iron Podcast. Make sure you check me out on Facebook, Twitter, and Instagram. That's where you're going to find the latest editions of the Moving Iron Podcast. Also, go to MovingIronLLC.com for everything Moving Iron related. So with that, I am Casey Seymour with Chip Nellinger. Let's go move some iron, folks. Out. You want to have a meaningful competitive advantage to help sell more equipment. Whether you represent the sales, parts, or management department of an implement dealership, there's a surprising amount of complexity when it comes to tire, wheel, and track technology. Let Axon worry about that so you can get back to supporting your customers. Axon has leveraged years of experience to create a streamlined process that gives you a proven path to help today's grower and sell more equipment. The roots of their organization go back almost 100 years to the invention of the rubber tractor tire. Supporting agriculture is the number one driver of Axon, from product development through sales and service. To find more or become an Axon dealer, head over to AxonTire.com.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again. Through the years you'll find us here.